Well, we have seen a significant slowdown over the last year, and I think the weakness is more related to trade and also some of the softness we saw in spending on services over the summer. People pulled back, actually, on the discretionary spending on accommodation and food in August in response to concerns about the trade war. That negative news effect is much larger than it once was, even though consumers are still on very solid footing. And I think that's what you're also seeing in the slowdown in leisure and hospitality hires. That slowed down quite dramatically over the last year. Retail, we know that's a restructuring story, and the manufacturing sector, of course, is related to trade. So I do think we're seeing some of this more of a weakness, although there are parts of the economy where you literally can't find workers. Transportation and warehousing is one of those. At that last mile of delivery is where they're having the hardest time finding workers. They did hire up this month, and that is where wages had been accelerating. The deceleration in wages are in information technology. That's things like Google and wireless, telephones, cable, news, broadcasting. That's the area that had been the fastest wage growth. That slowed to almost half its usual pace in this last month.
Grant, where do you see the challenges here for the job market? For David, sorry about that. Where do you see the challenges for the job market and for wages and how it fits into the overall economy?
Well, I think the most important thing to recognize here is the limits to growth. I mean, it's great to see an unemployment rate of 3.5%, the lowest since 1969. But everywhere in this report, you can see that businesses are really finding it hard to find qualified workers. And I think that is having some effect. But I think the immigration story is actually quite big in this report, too, because if you look at that slowness in the leisure and hospitality industries, well, that makes sense to me based on a big decline in non-immigrant visas. There are actually fewer tourists coming from abroad visiting the United States. That could be having an effect. And then also, there was a pent-up demand for labor because we've had over 7 million job openings for over a year. I think it takes a while to feed through. So I'm a little bit more concerned about this. I do think that this, to some extent, reflects still lingering strength from last year. But I think these job numbers will slow as we head towards the end of the year. We've got a supply-side constraint and we've got a demand-side constraint because of the trade war and the impact that's having on business psychology.
When you're talking about psychology, too, how do you see, David, the psychology on the consumer when we're still seeing consumer spending? We're heading into the all-important retail season. Yep. Retail's been struggling, lost 11,000 jobs here. Do you think that that's likely to turn around these last couple months of the year?
I don't think the job losses in retail will turn around because it's just this huge mix shift towards online. But I think that'll stay strong. What happens is when consumer confidence falls, I've never seen consumer spending really pull back. What really happens is that businesses become more cautious and they slow down on hiring. So I'm going to be looking at next week's JOLTS report very carefully to see is that inventory of job openings beginning to come down? Are businesses being a little bit more careful about hiring? Because to me, that is a real warning sign of an economic slowdown is when businesses get scared. I never think American consumers are going to get scared. They're the toughest consumers in the world. When the going gets tough, Americans go shopping. So that's not the thing that I worry about.